The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians on this very important Tuesday the 22nd of January. The reason why it's important is that there was in the Chapman Wave methodology, which I'll be teaching in great detail tomorrow, Wednesday, in my all-day webinar, we look for the fourth highest peak. At peak D, other things can happen. And you identify the low bar through various means, and if you keep making successively higher peaks, it's when you get to that fourth highest peak, peak D, can go to E, F, and G, but D is where other things can happen. This is what you got to watch for. And the reason why I stayed on this, I just did the TFNN noon update. The reason why I stayed on this is, you see this inverted Chapman Wave stalk leg formations upside down. Usually you see it the other way around. The leg, long leg is there, single leg, oval body, then you get the neck and the beak. Here it's the other way around. Leg comes down, oval body, neck, and then you get the beak. The reason why I wanted to stay on this is there are a whole bunch of techniques here based on the Chapman Wave methodology, but the most important one that I just want to look at here that you can see so visually, a lot of what I'm going to do tomorrow, yes, of course, some of it has to do with the alphabet, the naming of the peaks. To me, that's going to be important, but absolutely subsidiary to so many other techniques. Let me show you something. You see this? This is the daily, the weekly, the monthly of crude oil. You see with the way it came down, steady, 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 steady. Then it goes, all it could do is go sideways, made that oval pattern, and then break down the 49.41 support, and went much lower down and went to 42.36 on the 24th. Let me just double check. Yeah, 42, whoops, 42, where did I get 36 from? Oh, this gets smoothed out. I'm going to call it what it is. It's 42.60. All right, I'm not sure why I typed that in. It is a continuous contract, so maybe it got smoothed out. So 42.60 on the 24th of December. And then it rallies and it goes to that fourth highest peak in a Chapman Wave left side, right side price time match. We don't have to talk about that. I'm going to be doing that in great detail tomorrow, discussing how you can identify this, how you can use a Chapman Wave inside wedge, target line, etc. Not the point. The point right here is to show you that in the weekly chart, after that long-legged doji candle at the bottom, having gone from 76.90 to 42.60, I would say that's a bit of a slide. Look at the way it's only gone. What would you say? That's a half. It's about a fifth, maybe a little more than a fifth. So what we're looking at here from 42. No, wait a minute, it's more than that. From 42 to 54 to the 54.70s, you can say that 5, 7, yes. So you can say, if you just visually look at this, the rally that has unfolded now, keep a look at this, is good, but it isn't really strong. It didn't go into the 60, 59, 61 area. And if you look at the monthly straight down for 3 months, and this is the best you could do so far. So I look at this and I say, okay, on just a purely visual basis, we're not done. There's going to be more testing of lower levels, maybe not the lower 42.60, but lower levels than where we are, to form some kind of a basis, the MACD and the weekly chart, because the technicals and the daily are pretty good. The weekly and the technicals need to improve a lot. And of course, the monthly looks terrible. The reason why I wanted to say with that is, look, here we go. Dow, look at that rebound. That rebound, look at the weekly chart. That took you not to a half, but really more than 1/3 to a half above the low, 26.951. to 21.712, and it rallies to 24.750, 3,000 point move. Well, 3,000 point move is a little less than half. 3,400 point move would be half. So this is impressive, and the MACD and the daily are impressive. Yes, we did go short this morning just because there's a chance. Now let me explain. This gets technical. This is part of the Chapman Wave methodology. So there's a really good chance that by the end of the day, we're making a peak D. Doesn't tell you where we're going to finally close, but peak D in the daily chart. Look at the S&P. The S&P had a spectacular move to the upside, but it's only gone to a peak C if there's no new high. And it should go to a D because the technicals are strong enough that there should be at least a bounce. And 2006.99 is the 200-period exponential moving average. We got a bit of away from there at 26.37. But I just have to tell you that there's a chance because of the strong technicals that there's some kind of attempt in the next 2 days to have a pretty decent bounce. And then we see if the next failure pattern goes to a lower low. It's kind of the way I'm looking at the market. If you look at the QQQ, peak D made today with a doji candle at 166.02. MACD is strong. Stochastic is very strong at 93% in the daily. I suspect we're going to be pulling back the 162.10 to the 166.85 on the moving average support levels. Could do that. It's had a spectacular run, even if it gives back just the 2 days, Thursday and Friday's move. You can come back to the low of 161.57. That's 4.5 points, but that yeah, why not? All right. So the weekly's improving, not great, but it's improving, and the monthly's improving. Now let's go to the IWM. IWM, if you look at the monthly chart, this is just a nice bounce, but that's all it is. If you look at the weekly chart, yeah, nice bounce. That's all it is. If you look at the daily, you say, hey, pretty darn good. Look, you broke the resistance level in the Chapman wave falling X formation. What is the falling X formation? There we go. What is the falling X formation? That is where you make lower highs and much lower lows in an expanding cone, downward cone. And then the moment you break the resistance point, you go through the Chapman wave inside track repellent zone, and you go, say, in this case, 148.70 to 149. That makes the whole area into the 144s, tremendous support. That's the way this one would work. And if you look at the, so IWM 145.25 down 2.08. Now let's go to gold. Gold was down just a little bit before. Now still down 0.1, just 10 cents, 1282.5. If you look at the GDX, if you don't mind, so this is at 1282.6. If you look at the GDX, I've got this in a sell mode in the daily. Weekly chart is still pretty good, but having gone from the 20, I forgot to type that in, 21.54 high of the third, 21.54, 1, 3. Is that what it is, the third or the 23rd? Just let me fix that in a moment. Yeah, the 3rd of January. Whew. I was going to say memory was really bad that time, huh? Couldn't even remember for 2 seconds ago. 21.54 down at 20.34. Not a big deal, but the MACD is very weak. Stochastic is at 14%, getting to an area where it might try to bounce. But below the 200-period exponential moving average of 20.56, not so good. And the weekly chart is holding support. So if we look at silver, as we go out to the break, is down 0.05 at 15.34. Much weaker chart. There's a sell mode here as well in the daily, not in the weekly, but the daily. And that says if you look at the dollar's holding steady, just down a fraction, down 0.04. Had a nice bounce. I'll talk more about this when we get back. Basil Chapman, Tiger Technicians Hour. Be right back. Dow's down 292. Yes, 290.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, so we're back, and yes, just a couple of things. I was Friday afternoon, I was at the New England Auto Show. The improvements are really impressive. I sent out a report to my subscribers, some opening call this morning, and I'm not sure if I did it last night as well. Anyway, I repeated it this morning, and a couple of observations. The most important observation is that quality has really improved in terms of just the physical feel within the automobile. I didn't drive them. You could have, but I didn't. And I'll talk more about it later. I don't want to waste time now, but it was impressive. There was nothing there that said to me, uh-oh, major top like you had maybe with automobiles in 69, 74, and almost all the big tops, 2000. You remember I spoke about the Cadillac. They turned this truck into a wagon. It was the biggest, we didn't have the term SUV at the time, but the biggest wagon you've seen. It was just a preponderance of excessivity. Now we're getting to the stage in the interiors, but it's the exterior that I also want to see it. I think we've got about a year or two to go, and then I think we reach that point that says, oh my God, excessiveness supreme. All right, enough with that. So another question I had was, and I thank those of you who emailed me on the fastest production cars around and most expensive. Yeah, it's amazing what's going on. Over $1 million for the McLaren. All right, here we go. GT, so could I look at Boeing? Well, let's just finish this. So the dollar is acting very well. Yes, there's a fairly quick peak A, then a peak B, and now it's a leg C, but it's only a leg C, and that's taking a little bit of time, so it's not quite as quick as usual. My most important thing is that the dollar needs to get, it'll make an arch formation. In fact, I'll draw it in now because I love to look at fighting patterns, and the fighting pattern says if there's a failure here and the dollar at 96.33 starts to trade at 95.92, anyway, in the 95, 92-ish area, that's going to be negative. It's probably going to be a failure, and you'll see the euro start to climb. But the euro, if you look at it right now, look, the euro is acting, woo, this is not good. Lousy action. Euro USD JPY even is not responding as well as it should. The USD JPY, the yen, Japanese yen currency. That's okay. It's holding quite nicely, especially after that candle. I mean, that is amazing, right? So it's trading at 109.36, down just a little bit. So next question is, here comes the challenge. Okay, time to put your money where your advice is. Put on a very short-term SPY option trade, assuming it makes a leg D? Good question. All right. I thought I explained it before. I'm going to do this again. When you are under previous highs, if this was at an all-time high and it made a peak C, I would have said no matter what, there's just a really good chance, 95% chance that you will go to a D. But here you are, you could take your time. This peak C could last, you could go have another 3 or 4 days. You could even go down to the 255s and then suddenly, and I think this is what might happen, have a sudden spiral to the upside, make a nominal new high just above 266.98, and then come down. The Dow doesn't even have to go to an E. It could go to the E, but it's got everything done. I mean, to me, all the upside requisites that we've had, we've been trying to buy ever since December the 26th. We've been buying our long positions. You know, it's very interesting. Some of our long positions today are doing really well. Let me just double check because it was a short while ago. Yep, still doing well. And we put on some shorts, and the shorts are doing well. So this is the first time we've had shorts in ages. Really, a few weeks. So, okay, let's get back to our story. What we're looking at here is that the question of the SPY says, yeah, I might even do that for those who like to trade options. You know, we had a very successful option with a 228 January call option. And in fact, for those of you I know, 1 and 2 held it all the way through. It went from $7.20 to close at $16.75 on Friday. We were out earlier than that. We took really nice gains, 40 and 50%. But you know, when I stated to buy, I didn't say buy half a dozen or anything. I just said to buy. So I don't take it for granted that everyone did that. So yeah, we'll see what happens. I haven't done options for a very long time. We're waiting for a special occasion. That was it. We'll see if I do it again. Meantime, back at the ranch, the way the leg D can come in, it doesn't have to come in now, because if you bought an option, I wouldn't be buying it right now, down 339. I probably would wait at least to try for another down day. I'd rather be looking at 262 to 261 to try to get to the 265s. That to me makes a lot more sense. Otherwise, there's just too much risk. But you do have February, and that's going to be a little expensive. It wouldn't be, it has to be timed perfectly. Next question, Ed, is Boeing. Yep, Boeing. Boeing is looking, this is a peak C. There's another reason why I didn't want to get too carried away with the short side, because I think it's very specific. And for those areas that are weakest, and I'll talk about that in a moment. This is going to be legs seen, probably a peak C today. Does it have to go to a D? Oh, I didn't finish my thought. My thought is, in the Chapman methodology, going to all-time highs, it is rare. Like this here in Boeing, could it be a peak C? Yep, it could. Could it be a peak G? It's probably more likely a peak G. I don't know yet. But it would be rare for it to be a C and then fail. That's why we were lucky that I was able to put in an alternate count based on this Chapman wave instant restart right here from peak D. And we'll be discussing these techniques tomorrow in great detail. That's what I'm saying. You don't necessarily have to know all the wave counts, although it's really important, but it's not absolutely imperative. Look, you've got a W formation here, and it has not broken above the high in Boeing of 370 back on the 8th of November. If it does that, it means one thing. If it fails, it means another. All right. The question I had was, did I finish? I did that. Oh, TLT. The TLT rallying today. I said to subscribers to my opening call, I suspect, based on the yield chart, my triple yield chart that I sent out over the weekend, you know, my daily newsletter has just a wealth of information. Am I going to be able to do that? Yeah, I'll do that right now. Here we go. So here's the dollar chart. I do a very deep analysis of these different things as they're progressing through the different waveforms. Here's the dollar. Let me see if I can find something here. Let me just go to something that makes sense for what we're doing right now. What is that? Oh, so yes, the E-mini I just showed. Every day I show the E-mini, and it shows you that there's a turn down. Here's your peak C in the daily. Here's your peak C in the 120-minute chart. It has all the look of a D, and that's the reason why I was quite prepared to treat it as a D. No, I don't want to go into that, but it's a peak treated as a D, even though it says C, because it was underneath the previous high, and that was very important. So if it's under the previous high, I'm able to do different things because I know that at highs, one thing happens, at lows, something else happens. So here's a 120-minute chart, a really detailed report on about 5 or 6 different techniques, and it made a Chapman Wave 5 and a peak F if there was a lower high bar today. And look what's happened to the 120-minute chart. Look at this big pullback. All right, I'll be back. Basil Chapman, Tiger Conditions Hour. I've got a lot of questions coming in. I'll deal with it as soon as we return. Dow is down, 300. I'll be back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I was asked to look at FNMA, Fannie Mae. Some of you remember this from way back. Fannie Mae, which is trading at 2.7800, so it must have been a pink slip at some point. This is looking spectacular in the daily chart, having gone from $1, actually under $1, just in December, to a high today of 2.96. That's a 300% gain, and it's in leg C daily only a leg A weekly and a leg A monthly. Now, let me just do a couple of things. So Fannie Mae, as I understand it, as I'm told, let me see if I can find the exact wording. I don't want to do something. Oops. I don't know if I'm going to find it. I got it right. Okay, there we go. So it has been in government conservatorship for 10 years, taking profits for Treasury, and now the right people are in place to free it up and become the old Fannie Mae again. The common share price depends on what plan they put in place. So this is a spec on doing what would probably be perceived as freeing up the stock to be more a market participant. That's just my guess, okay? I like it, and I would just say that at 2.78, it's kind of risky to buy it now because it's both rumor, it's word, it's a story, and I only play story stocks if I see it acting a certain way, and then suddenly it pulls back for no reason that I can perceive, starts to form some kind of a base, and that gives you the chance for another big move up, or it's going to fail. But at that point, I'd rather buy it much lower because I want to put in a risk that's worth the potential, in this case for legs D, if this becomes a peak C, of 2.9601. I think it trades, no, it doesn't trade in 001s. So it would be 2.97. All right. So as it stands right now, it's at 2.77. I would say, based on the 120-minute chart, if I can get it, A, B, C, D, E. Yeah, at 2.37. Man. I would like it under today's low. Just a nick. It just has to go to 2.48. Oh, it does go into increments. All right. Just as long as it goes under today's low or even close. So if you're really looking for an entry point, my preference is 2.40 to 2.36. 2.42 to 2.36. That's kind of where I think the risk reward is best. And then you have no choice, but you have to put in about a 12 or 13% risk. So you start off small, and once it starts to climb, as if it's going to go to a potential leg D, if there's no new high tomorrow, and then it takes a little time to do that, then you can add on the way up. I hope that helps you, but I am looking at it and saying, by the usual metrics that I use, the tools that I use, the high today says that there's a good chance that it's going to touch 3.10. And if it closes above 3.10, all of a sudden that high that was made way back in October of 2017 of 3.31 becomes a focus. I just go one step at a time. First, try to get in. If you're in it, just stay in. If you want to add to it, that's the way I would do it. I have to have a pullback. If you're in it with a really good profit, you can afford to go in a little higher, but keep the same fairly tight stop. Hope that helps you, because it does look like it wants to go higher, but it is a story stock. And as a story stock, bad story, good story, bad story, and that's what you're looking at here forever. Way good story. Back in November of 2016, it goes from 1.61 to 4.57. Whoa, the next month it goes to $5, round number, and that's all she said. And then it goes down to 1.98 last month. So, yep, story stock both ways. All right, good. Next question I had was, would I look at Intel? All right, I haven't looked at Intel for a little while. Peak A, peak B, peak C again. Keeps making the C. Now, here's an instance of the Chapman wave, stalk leg formation. There's the leg, there's the body in the daily, there's the neck, there's the beak. The beak broke underneath the body low, very, body low, not good at all. Went much lower, and then what happens when the beak is complete? It has a heck of a rally, and then you're on your own. Well, the heck of the rally took it to, this is a peak C minus because it failed. Peak C minus, remember, underneath the previous highs. C's can fail. That's the reason I got my D's. I got 3 out of 4 of the indices with D's. Wait, maybe it was 5, I can't remember offhand. New York Stock Exchange, NYA.X, New York Stock Exchange, was an A. Yeah, that was also a C. I remember now. That was a B, and there's your C. Yeah, that says that they should. I've got an up arrow. There are buy modes, and buy modes invariably go to a D. So, yep, I as I said, we were short, and I do intend. There's a chance that we're going to flip back to the long side in the Dow very soon. All right, here we go. So I've done that. Oh, so Intel, peak C, second time around, underneath the previous high. Usually that's not good. Also, peak D's way under the previous high. I don't like that. That's usually not a good sign for me. So MACD and stochastic are good, but the pattern says arch formation going to another arch formation. So Intel is weak, and it's kind of impacting the semis. The semis are down 2.75. That's a way bigger percentage than anything else. They're down at 90.33. Yes, we did go short at the open today. And I'm expecting just a pullback, but I am anticipating, we're talking about rallies. Remember, I was looking at crude oil. Now I can bring this up. I wasn't going to, but since it was mentioned, I'm going to say to you that the rally in semiconductors is the one thing that's saying to me, be careful. Yes, C failure, C minus it can be an arch formation going back like a dreaded H to the lows. They can. They don't have to. I'm just saying, yeah. That was mentioned in the den by one of our Chapman waivers. SMH, semiconductor at 90.33, down 255, down 2.75%. Made a peak D in the left side, right side price time match. One day, it didn't quite get there. Just missed the left side high. And in one day, it was short, both in time and price. The other thing is that the MACD is good. Stochastics at 82%, but they're not showing the same strength that the Dow and the S&P and the Qs and the IWM are showing. And this rally off the 200-period moving average going all the way down to 80.71 from 114.55 back in March of last year. This is just a lousy candle. This is barely a rally. It looks great on the daily, but it's really nothing. So the semis to me are the weakest. I've said for a long time, based on information that I'm getting, this is both my friend who's in the business, but as well as other people and folks that were at the show, the most recent show in Las Vegas. I'm thinking that with the semis, which led all the way up into March of last year, the New York Stock Exchange, which failed in January of last year, never went to a new high. I'm thinking that the semis are telling us they need another at least 6 weeks of war to be able to get themselves together to start building new inventory for the end of the year. So I'm looking at them and saying I think they're one of the weaker indices. All right, we'll be back. Dow's down to 80.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we were looking at, on Friday, I think it was, we were looking at UNG. What I said is this particular pattern says you need speed to the upside, and that the candle that was formed said unless we can break into 30, I think I said 30.80 to 31 area very quickly, it just looks to me like it's just chop, chop, chop to the side. And the question was, how quickly can it move? And you know that United States Natural Gas Fund, this can move really quickly. At any point, it can look horrible one day, and then just overnight it gaps up because it has to do with weather. It has to do with a lot of things. And what I'd done is I drawn in peak C, and I said, you need speed. You need to make this cup formation, left side, right side, price, time match. You need to break above that for leg D above 3.722 in the continuous contract, so you can get to the left side highs of 3.89. Well, today it plunges down 0.34 with the coldest weather. I mean, we had weather over the weekend. It was just, Saturday was very nice up until the snow started in the evening. And then it became ice so quickly, so cold. And it just turned to ice. I mean, I've got, you know, I look like a little mountain forest here with my hill and all. So I wasn't sure whether I'd even be able to get one of the cars out. Thank goodness with all-wheel drive, it was okay. But that was a challenge. And I'm looking at natural gas. I'm saying, what is going on? There must be such a plethora of natural gas. Maybe that's what it is, because this thing should be higher right across the country. You're getting these cold waves. So all I can say is I'm doing the chart. The chart says nothing to see here until we break. I think that's what I said last week. Until we can break into 3.80s. And then it's going to move very quickly. So far, nothing to see. So that was that. Goldman Sachs had a question. Goldman is trading. See, this is why I only said I want us as a short-term trade to be in this position, at least for one of them. The other might turn out to be a little bit longer. And one of the reasons is, look at this. Goldman Sachs is down 4.24 at 198.30. But look at that massive gap into the 185 area and then higher. And was trading at 179 just before that, and it's still holding pretty well today. It's just barely taking out Friday's low. I like this. If you're looking at the IAI, which is the broker-dealer index, pulls back a little bit, down 0.72 at 60.72. Look at this. It's gone from 51.96 to 61.47, holding well. And that's the reason I'm saying be selective. We've got our prices. I might switch at any day now, switch from the short to the long, back to the long side. Mostly we're long. I don't want to mess with the long positions. They're doing really well. So this is a tired market that needed a break first. It will get more than a break if Goldman Sachs takes back a chunk of the gain and starts trading the 193 to 187 area in the next 3 days. That'll say, uh-oh, bad times coming for at least the short term. be careful. But right now, it's just there's just too many people that missed this move and didn't believe it. I know that we didn't. Not that I didn't believe it. It's just that every time we put in what should have been a reasonable pullback from the day's close previous, we didn't get it the next day. They just kept climbing. Thank goodness our bank stock is still doing fantastically. I wanted Goldman Sachs. Instead, we've got another one. But Goldman Sachs is, this is the first pretty decent move it's had since a year ago, well, more than a year ago. This is that candle from, is that August of 2016? Yeah, August of 2016. And there's your only peak C that I can go with that so far hasn't taken out the low. It hasn't taken out the 138.20 low, and that is an active peak C in Goldman Sachs in the monthly. And I keep getting asked about it, and I say, you know what? I have no alternate count. There's nothing I can do. It's a C. It's saying there should eventually be, there could even be an overlapping waveform. That we start a brand new A, then a B. Under that, there's a C, and then eventually it goes to 276 in leg D. And you go ABC, pulls back, so it's a C minus. Then it goes gray, A, B, C, underneath the previous highs. And then leg D is, and I'm thinking this is possibly what's going to happen, is a combined power move. And as soon as it takes out 275.31, it reactivates the previous C, goes to a D in all time in this monthly chart in 2 buy modes, and it's really powerful. And then it goes to a D, and then it pulls back and retests the 275.31 area. All right. So now let me see. SWK. So this is something that, SWK, Black & Decker, standing Black & Decker, one of my favorites, but we have no position. I'm just watching it now. Went to the peak C, under the peak D. Oh, my. The 3rd of December goes to 139.45. Nice recovery. Hits the 200-period moving average, plummets to the 110 level, screams back up to the 137.96 level on the 18th. And today gaps down, almost an island reversal. Gaps down, it's down 19.80 at minus 14. Let's see Home Depot. So we'll do this right now because I will be doing it tomorrow in great detail. Folks, there's still a chance if you want. You can sign up for my webinar tomorrow. It's an all-day webinar. We've got different levels. We've got beginners who are good. We've got people that are really conversant, very conversant, have taken many of my courses on the Chapman Wave. And we've got folks that are kind of comfortable with it, not 100%, but they're really wanting to learn more. And what I'm emphasizing is that I'm all about patterns. Yes, I will be talking about the waveform in terms of peak A, peak B, peak C, peak D. Look at that D in Home Depot, plummets from 215 down to 158. Wow. And that rally is not that great. But it's the patterns. We're going to spend so much time on pattern and moving averages. What are the important moving averages and what have I learned over the last many months? Yeah, I might just briefly touch on my Chapman Wave 5. There's a Chapman Wave 5 peak F in the 120-minute chart, but I've not yet got it to the point where I can articulate it with specificity that doesn't change. There's just one or two things that happen. I don't like that. I want specificity. I like that in my work. You got to put your mouth where you got to put your action where the mouth is. So we don't say the Dow is going to go to 60,000 and have not a single trade in the Dow. No, we do what we can. We absolutely talking about what we're doing. It's really important. So you'll see, Home Depot, nice move to the upside from 158 to the 180 level. It needs to hold here and then start another series of highs. That's really important. Yes, I remember that. Let me just get back here to do that. Next question I had. Yeah, I did do the stocks and I did do Intel. ARNC, not just do, yeah, I did AR, I think I did ARNC, I did during the break. ARNC is, I don't know what they do. Arconic Inc. Oh, Arconic Inc. Iconic. Yeah, this is iconic because look, it's down $15, down 3.13%. Not good at all. I'm not sure. Yeah, not good. All right, we've got a break coming up. We'll do a wrap-up as soon as I get back. I'm going to re-articulate my thinking for this particular period. Remember my webinar, entries and exits. We shorted the Dow a day after its all-time high. We started buying, sometimes successfully, sometimes not, right at the low, December 26th. And today we just shorted again, whether it works.
Great moments are born from great opportunity. And that's what we have here, folks. The opportunity of a lifetime for most. I'm Steve Rhodes, the 2018 Market Timer of the Year. And on Thursday, January 24th at 4:15 p.m., I'll share with you what I see as the next great buying opportunity. This free workshop, sponsored by Ninja Trader, is available to everyone. There's no gimmicks, no credit cards, no lengthy sign-up, and you don't have to be a subscriber to my award-winning daily newsletter service, Mastering Probability. All you need is a name, email address, and contact number. Just click on my name on the homepage of TFNN.com to gain access to the live or archived version of the next great buying opportunity. Folks, everything in life happens for us, not to us. The fact is, this workshop is happening for you so that you can learn how, why, and when to take advantage of the next great buying opportunity. Timing is everything. So sign up today on the homepage of TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. As we're going to the last few minutes, let me show you here's the 2-minute E-mini, 3-minute, 5-minute E-mini, and the 10-minute. The 10-minute gave a beautiful, on Sunday nights, it gave a beautiful PD signal, and Sunday night right there. And all day yesterday, it just kept coming down, went to a peak E, ran again, made an arch that goes to a lowercase h, that goes to a lowercase m, and then broke down this morning. Now we're just about to get the first attempt at a rally that's starting with the technicals improving for the very first time. Look at the way the MACD histogram, look at that deep candle right there. Now the histogram's starting to improve. It's even gone a bit green. So there's a first opportunity. I did this before my show started. I showed this with a trend line, and I said I drew the circle in, and it went right to the circle. These are techniques that I will be discussing. Look how quick it went from peak A to B to C to D, and now leg E with a chance of peak E in the 2-minute chart with the technicals really good. Hey, it should have been much higher. This is where the technicals, is the wheel spinning. You got your foot on the accelerator like I was earlier on in the ice, and the wheels are spinning, and the car just dug, 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 dug. You see, this is it. And this means you got to be very careful. Yet the 5-minute chart says we've got so oversold that there should be some kind of a bounce. Well, if that bounce doesn't work, watch out. You do not want to take out the low of 26.32 because that'll be very negative. You want, within an hour, you want to see it start to trade at, instead of 26.36 right now, somewhere in the 26.42 or higher area to say, okay, done for now. Maybe into tomorrow we can start to improve a little bit, and maybe by Thursday we get another bounce, a stronger bounce. We'll see. But this is the way we're going to do it tomorrow, and all the information pertaining to it. So it's my webinar, my all-day webinar, entries and exits. Of course, there's so many other things that we're going to be doing, but it is entries and exits, and what can keep you in a trade longer than you ever anticipated. Just like the dollar. Look, the dollar, we've been long since April the 6th, started off in the daily chart, really good. Then it went to the weekly chart, very good. And now the weekly chart is pulling back, and the monthly chart is handled. The baton has been passed over to the monthly chart, and we're still in the long position. And that's just the only way that you can do it, by moving through different time frames. Stay tuned for Steve, stay tuned for Dave, stay tuned for Tom. I'll be back with Tom a little later on today. Have a great rest of the day. And I won't see you tomorrow. I'll see you Thursday. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.